Welcome to XRP Pro Ledger, and today we are covering the single most important legislative moment for XRP since the SEC filed its lawsuit in 2020. The Senate Banking Committee is convening right now, and for the first time in the history of this asset, the United States federal government is preparing to write XRP's name directly into law as a permanent digital commodity under CFTC jurisdiction, not as guidance, not as a court ruling, not as an enforcement policy that the next administration can reverse, federal law. And I want you to stay with me through this entire breakdown, because at the 7-minute mark, I am going to show you exactly what the institutional price math says happens to XRP the moment this bill advances today. And those numbers are not community speculation. They come from Standard Chartered and Bloomberg Intelligence directly. But before we get to the numbers, let us talk about what actually happened overnight. Because the bipartisan deal collapsed, reports confirmed this morning that last-minute negotiations between Republican and Democratic members of the Senate Banking Committee failed to produce a compromise before today's 10:30 markup session. The deal is off. There will be no bipartisan agreement going into today's vote. And here is what most people in this community are misreading about that headline. The bipartisan deal collapsing is not bad news for the Clarity Act. It is irrelevant to the outcome. Here is why. The Senate Banking Committee is split 13-11 in favor of Republicans. The bill does not need Democratic support to advance out of committee. It never did. The bipartisan negotiations were an attempt to produce a cleaner political optic, not a mathematical necessity. Without the deal, the bill advances on a straight party line Republican vote, which is exactly what was always going to happen if negotiations failed. And here is what makes the bipartisan collapse story even more revealing. When the minority party spends the night trying to negotiate last-minute compromises on legislation they filed 100 amendments to stop, that is not the behavior of a faction that believes it can win the vote. That is the behavior of a faction that knows it has already lost, and is trying to extract whatever concessions it can before the inevitable. The failed deal tells you the same thing the 100 amendments told you last night. The opposition does not have the votes, and the 13-11 math is about to prove it. Coinbase CEO Brian Armstrong said it this morning. The Clarity Act is closer than ever to becoming law. Fidelity has formally endorsed the bill. The Digital Chamber has endorsed the bill. And the polymarket odds for the Clarity Act being signed into law in 2026 are sitting between 70 and 75%. The institutions that matter are not waiting for bipartisan unity. They are waiting for the 13 votes. And those 13 votes are locked. Now let us talk about what this bill actually does for XRP specifically, because this is where the story becomes very precise for every holder watching this breakdown. The base text of the Clarity Act, the 309-page manager's amendment released on May 12th, explicitly codifies XRP as a digital commodity under permanent CFTC jurisdiction once the mature blockchain and decentralization test is met. Let me be very clear about what that means. XRP's history as the target of the SEC lawsuit made it uniquely vulnerable in a way that Bitcoin and Ethereum never were. Bitcoin was never sued by the SEC. Ethereum was never taken to court over secondary market sales. XRP was, and that lawsuit created a regulatory cloud that institutional compliance departments have been navigating around for years. The Clarity Act removes that cloud permanently, not by winning a court case that could be appealed, not by getting favorable regulatory guidance that the next administration could reverse, but by writing XRP's commodity status directly into the United States legal code. Once this bill passes, there is no more SEC lawsuit risk. There is no more secondary market securities classification threat. There is no more regulatory uncertainty for any institution anywhere in the world that wants to use XRP for cross-border settlement or liquidity provision. And here is the distinction that most people underestimate. Every institution that has been cautious about XRP, every compliance department that has been waiting for legal certainty before approving XRP-related products, every bank that has been monitoring the regulatory situation before committing to ODL partnerships. They have all been waiting for exactly one thing, not a court win, not regulatory guidance. Federal law, because federal law cannot be appealed by the SEC. It cannot be reversed by a new administration. It cannot be reinterpreted by a new agency head. It is permanent. And today, that permanence is being written into the United States legal code with XRP's name on it. Brad Garlinghouse said it perfectly this morning. Clarity is better than chaos. And for XRP XRP specifically, this bill delivers clarity that Bitcoin and Ethereum already have, but that XRP has never had until now. Now let us talk about what the smart money is already doing before the vote result is even announced. Because the on-chain accumulation data tells a very specific story. Mid-tier XRP holders, wallets holding 10,000 XRP or more, hit a record high of 332,000 wallets just yesterday. And XRP is simultaneously topping Bitcoin and Ethereum in trading volumes on South Korea's Upbit and Bithumb exchanges. These are not retail speculators reacting to a headline. These are holders with meaningful positions, making deliberate accumulation decisions in the 24 hours before the most important regulatory vote in XRP history. The smart money does not wait for the green candle. It positions before the catalyst. And the on-chain data shows that positioning is already happening at record levels. Now let us talk about what happens to institutional flows once that clarity is confirmed. Because this is what I promised you at the 7-minute mark. Standard Chartered and Bloomberg intelligence analysts have both published projections for XRP ETF inflows following Clarity Act enactment. Their models project $4 to $8 billion in net XRP ETF inflows within 12 to 18 months of the bill being signed into law. Let me put that number in context. Total XRP ETF AUM right now is approximately $1.35 billion, accumulated during a period of regulatory uncertainty, during a period when the SEC lawsuit cloud was still theoretically present, during a period when the Clarity Act had not yet passed. The institutional money that has been sitting on the sidelines, waiting for the legal certainty that transforms XRP from a lawsuit coin into a strategic digital commodity, is measured in billions. And $4 to $8 billion of it is projected to flow into XRP ETF products within 18 months of today's outcome. And here is what the desk notes say about price when that capital arrives. A clean committee advance today, which is the expected outcome, is already being priced in as a catalyst toward the $1.70 to $2 range in the near term. Full Senate passage and a presidential signature, which Polymarket is pricing at 70 to 75% likelihood, opens the path to $5 to $8 or higher in 2026. According to multiple institutional desk projections, that is not a community prediction. That is institutional math published by Standard Chartered and Bloomberg Intelligence. Now, let us connect those projections to the supply picture, because the on-chain data adds a critical dimension to the institutional flow math. Exchange reserves have dropped from 3.76 billion XRP to approximately 1.66 billion XRP since October 2025. That is a 57% decline in liquid supply in under 8 months. Think about what happens when $4 to $8 billion of projected ETF inflows arrives into a market where the liquid supply has already been compressed by 57%. The ETFs are buying XRP on the open market automatically, through limit orders that execute as liquidity becomes available. The supply that would normally absorb that institutional buying has been removed from exchanges by whales and long-term holders who are not planning to sell at current prices. $4 to $8 billion of demand, arriving into a 57% compressed supply pool after the legal certainty that has been holding institutional capital back is permanently confirmed. That is not a prediction. That is arithmetic. Now let us talk about what is already live on the ground, because the infrastructure picture makes today's regulatory clarity even more significant. Ripple's on-demand liquidity system, which uses XRP as the bridge asset for cross-border payments, is already operating in over 90 countries. Think about what that means in the context of today's markup. The infrastructure for XRP to function as a global institutional payment rail is already built, already deployed, already processing transactions in over 90 countries. The only thing holding institutional adoption back from scaling to its full potential has been the regulatory uncertainty that the Clarity Act is designed to permanently remove. Once compliance departments at every bank in the world have legal certainty that XRP is a CFTC-regulated commodity, the friction that has been slowing ODL adoption disappears entirely. The RLUSD stablecoin picture also directly benefits from today's session. The Tillis-Alsobrooks yield compromise locked into the base text permits activity-based rewards on payment stablecoins. This is a direct tailwind for RLUSD adoption when paired with XRP rails. And the strong developer protections in Section 301 shield non-custodial XRPL builders, protecting the ongoing tokenization pilots with Ondo Finance, MasterCard, and JP Morgan Connexus. Now I want to address something directly, because this community deserves a rational voice on what today actually means and what it does not mean. There are still risks on the table. Senator Warren's amendments, including her proposal to ban crypto firms from Federal Reserve master accounts, represent the most damaging potential outcome for XRP's banking partnerships. But these amendments are expected to fail on party line votes. The 13-11 majority makes their passage essentially impossible. The bill that is expected to advance today is the Manager's Amendment, the industry-friendly base text that delivers commodity classification for XRP, DeFi developer protections, stablecoin clarity, and the institutional infrastructure frameworks that Ripple has been working towards since 2020. This is not a perfect bill. No legislation ever is. But it is the bill that transforms XRP from what the SEC tried to call a security into what the United States Federal Legal Code will permanently recognize as a digital commodity. Now let us talk about what most people in this community are getting wrong right now, because this psychological pattern shows up in every single market cycle. XRP is trading between $1.43 and $1.46. The Senate Banking Committee is meeting right now to advance the most important bill in XRP history. Fidelity has endorsed it. Coinbase has endorsed it. Bloomberg and Standard Chartered are projecting $4 to $8 billion in ETF inflows after passage. And the retail market is watching a sideways price chart, wondering if anything is happening. This is the discount window. Near the top of every cycle, the social proof is everywhere. Green candles on every screen, news channels covering crypto, friends texting about gains. The excitement creates an emotional safety signal that tells the brain it is safe to act because everyone else is acting right now. The most transformational regulatory moment in XRP's history is happening in a Senate committee room, and most of the retail market barely noticed. That is not weakness. That is the discount window staying open for the people who understand what is actually happening. The institutions already know. Fidelity endorsed the bill. Standard Chartered published the price math. Bloomberg published the ETF flow projections. The people managing billions of dollars of capital are not waiting for a green candle to tell them this matters. So let us zoom out and see the complete picture assembling right now on May 14th, 2026. The Senate Banking Committee is meeting at 10:30 this morning. The bipartisan deal collapsed, but the 13-11 Republican majority makes it irrelevant. XRP is explicitly named as a digital commodity in the base text. The SEC lawsuit cloud is being permanently removed. Standard Chartered and Bloomberg project $4 to $8 billion in ETF inflows within 18 months. Institutional desk notes point to $1.70 to $2 near term and $5 to $8 on full passage. Fidelity and Coinbase formally endorsed the bill. ODL already live in 90+ countries. Record 332,000 mid-tier wallets accumulating. Exchange liquid supply down 57% since October. Korea volumes topping Bitcoin. And Polymarket pricing full enactment at 70 to 75%. This is the moment XRP holders have been waiting for since 2020. The lawsuit coin narrative ends today. The strategic digital commodity narrative begins. If this analysis changed how you are thinking about what is happening in Washington right now and what it means for XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the move.